Well, hello, you trader nerds. Welcome into a wacky Wednesday. I am Sweet Bobby, Dr. Sweet Bobby. I told my daughter yesterday, she said, "You're not a doctor." I said, "Yes, I am. I'm just not a physician, but I'm a doctor." So, how y'all doing? And hope you're having a great day. Real traders never trade alone. They trade with their fellow nerds. We've got Avi with us. We got Bruce. We got Carl. We got DMT. We got Hal. I always miss Hal when he's gone. He was gone yesterday. We got Matt Jollywally. We got Mo. We got Rickster in the house. We got Steven. We got Stuff. We got Vicky with an I. We are all ready to go. Is my belly showing? I'm sorry, I'm in my underwear and my t-shirt. I apologize. So I hope everybody's having a great day. So I spent a lot of time refining the back tests yesterday. And what I did is I actually loaded into Claude. I loaded the actual daily price data of QQQ, and Claude come up with the whether the signal was up or down and all of that. And so what Claude and I determined yesterday was that the MACD lines did not provide a significant benefit to the strategy. And it was a time-consuming benefit for us to go through every month to see if we're above the monthly MACD, then to see if we're above the weekly MACD. And really, the performance was stunted when we used the MACD version. So yesterday, I was reading an academic paper on leverage that basically decided over the long run that the ideal amount of leverage, if leverage is to be used, is not 3x, but it's 2x leverage over the long run. Now, over the last 10 or 15 years, certainly 3x leverage has been the way to go. But it gave me a really good prompt for some new back testing. And what we did basically is said, well, what if we took our two indicators that we use, and let me just show you the two indicators that we use. So we're no longer using the MACD, but we are using the 10 versus 20 EMA, right? So I basically said, okay, we are fully invested in TQQQ if the 10 weekly monthly average is above the 20 weekly. We knew that. But what happens if the 10 week is below the 20 week? Well, that's where we go more into TMF. You remember that? That was correct, right? So, and then I said, let's look at our second symbol, and that is the 10 monthly simple moving average. If the 10-month simple moving average is below this. So I basically said, if both of these are below, right? If both of these are below, why don't we, instead of transferring less assets to TQQQ, why don't we get out of TQQQ altogether and then put some money in TML and then find out what else we should put money into? So it made sense to me that during a bearish market where things are not looking as good for our risk asset, being whatever value of leverage that we do with the Qs, is I said, what if we went to the 2x leverage QLD, right? So that was the test that we performed yesterday, and it brought about some interesting results. So the interesting results were, and I also said, well, what about if we did it even further? What if we just went to one leverage, 1x leverage? What if instead of being in TQQQ or QLD, the 2x leverage NASDAQ 100, what if we just went into QQQ? And those results were not as robust. So it seemed that QLD was the sweet spot. So we have made adjustments to the plan. I'm never adjusting it again. Wink, 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 wink. It is the plan that I am going forward with. And basically, what the plan says is this. Let me just make sure that everybody sees the plan. So I will post this today so everybody can get it. It is my anniversary. Beth and I have been happily married now for 17 years. Today is our 25th anniversary. I won't tell you which 17 we're the happy ones, but it's our 25th wedding anniversary today. Isn't that kind of cool? So the uh yeah, thank you very much. Thank you very much, Sam. 25 years is a long time to stay with me, that's for sure. So now we basically have a strategy that involves TQQQ, TML, QLD, and bill, right? So there's 4 assets that we can actually be in. The base allocation every month when we start is 55% TQQQ, 45% TMF. Nothing else has changed. We've got the federal funds rate trigger in there. We've got VIX adjustments. And then we've got the EMA and SMA allocation adjustments. And this is where things change. If the QQQ is above its 10-month simple moving average and the 10-week exponential moving average is above the 20-week exponential moving average, baby, we are full throttle in TQQQ going up to 80% in this asset. Okay, we are ready to roll. We are rolling with the tide. So basically, we're looking at trend and momentum. If the trend is up and momentum is full speed ahead, then we go 80% TQQQ as a max. All right. But if the Qs are below the 10-month average and the 10-week exponential is below the 20-week exponential, we switch to 50% QLD and 50% TML. If those two trend indicators, the 10-month simple moving average and the weekly exponential moving averages, are mixed signals, we tested a lot of variations of this as well, and it made sense to do no trend-based adjustment at all. So you don't go up 20, you don't go down 20, you don't switch to QLD, you keep everything. So everything else was really, really, really good. Let's see if I can go back to Claude and see some of our back-tested results. Y'all just give me a second to sing a little bit, and let's see if we got here. So basically, we went down there. Let's see if we can figure out what the, yeah, I said, what if we went to Qs, right? And here it was, one of them went to 46 million, one of them went to 32 million, 39 million with the Qs. So that didn't work out as well. Let's see what the basic back tested results were. Yeah, here was our thing. Mixed signals, no adjustment, gave us $46 million. So the back test showed that us taking a $100,000 account to $46 million in, what was it, 15 years, which is pretty good, I would say. That's a 55% adjusted return there, compound annual growth rate. Sharp ratio 1.71, and then the max drawdown was not really that bad, y'all. It was just 24%. Now, I think if you were to take the drawdown of SPY during that time, it probably had a bigger drawdown than 24%. So we've come up with a robust back-tested strategy, which, here's the problem. It's back-tested. It's back-tested in a bull market. How will this do in a long-term significant sideways market? Well, time will tell. But I'll tell you this, we won't have the leverage decay, right? We won't have the leverage decay of the 3x during those periods when the market is kind of sideways or down. We will only have 2x, which is a little bit better. So I was really happy that that improved the result a lot. So I will post the new trading plan today. I hope to never change it again. Y'all know how that goes. But this is based on today's date, which is my anniversary. So that'd be easy to remember. And then let's look at the spreadsheet, which is kind of cool now. So the spreadsheet automatically pulls in the price of TQQ, TMF, bill, and all of that. And let's say that if both of these moving averages are ahead, then what it does is it puts you 80% into TQQ and 20% into TMF, right? So you've got a little bit of diversity there, and it tells you the exact numbers of shares to buy. But if one of these is no, then it makes no adjustment to TQQQ and keeps it at 62.5%. That's the 55% plus the VIX adjustment. Here's the VIX adjustment. But if both of these puppies go no, are we above the weekly and the monthly simple moving averages or no, it puts us into 50% TMF and it puts us into 50% QLD. Now, I know what some of you on YouTube are going to say, Bobby, doesn't that create taxable events? And the answer to that is yes, it does. So, in doing your results, you'd have to figure in taxes on, when you sell those TQQ stocks for a profit. But keep in mind, for my purposes, and probably for some of yours, I'm running this in an IRA, right? I've got this running in a Roth IRA and a regular IRA. So I'm not going to have to worry about the tax consequences of making those decisions. So this is best run in a tax deferred or a tax advantaged account. I'll admit that freely. Can you run it in a regular account? Yeah, absolutely you can. But you do need to realize that there may be some tax events along the way. But I have no problem in converting my TQQ shares into QLD shares. So this is really good. But we did put a refresh button here that'll refresh these prices. Just show you that. Uh-oh. Cannot run the macro. Macro might be able to work. Oh, I don't know why that's not working. Huh. Anyway, I got to figure that out. But, oh, look, macro says block macros running because the source of this file is untrusted. Well, we trust this file, baby. We trust it. So I'm not sure why it says it's untrusted. But anyway, we'll figure that out. All right, guys, great session today. Hope you have a wonderful day. I'm really excited about this new trading strategy. I love it because I don't have a worry about my account being overdrawn. I will never owe money to Thinkorswim or to tastytrade like could have been the case last time with options. Isn't this amazing? And then we just keep our little hedge on. So when it crashes, we have extra money to put into our TQQQ. And that's the plan. If the market crashes and we make $20,000 or $30,000 on the crash, we immediately go and say, hey, baby, since it crashed so much and, TQQs are down, 20, 30, 40, 50, 60%, let's buy and put some into our pockets. So this is a really, really robust plan. It's based on a lot of back testing. It took $100,000 to 46 million. Whereas if you had held TQQQ 100%, it would have taken you up to like 7 million. So it's really robust for the past. Will it be robust in the future? I don't know. Don't put your baby's formula money into this plan. This is more like a fun money plan, baby. Fun money. That's what we're doing. We're fun moneying and seeing if we can convert my 75,000 into a few $1,000,000 in a few years. So let's see if we can do it, and we'll do it together. I love you and appreciate you and hope you all have a wonderful rest of your day. I will see y'all tomorrow.